Hey everybody, what's happening? Son of a silver stacker here. In today's economic opinion for February 14, 2023, I'd like to take you here to marketwatch.com. All right, so big stuff coming out today. This week's major U.S. economic reports and Fed speakers. So today is the 14th, so let's go ahead and look at the 14th. Here we go. So 6 a.m. NFIB Small Business Index, then today Consumer Price Index at 8:30 a.m. Core CPI, CPI year over year, Core CPI year over year. This is a big day, folks, in the markets. And if you don't know what Core CPI and all that stuff is, so inflation is an increase in the overall price level, okay? But the official inflation rate is tracked by something calculating changes in a measure called the Consumer Price Index. That's the CPI. CPI is Consumer Price Index, tracks changes in the cost of living over time. Okay, so that's coming out today. And then mañana, that's tomorrow, we got retail sales excluding motor vehicles, Empire State Manufacturing Index, capacity utilization, business inventories. That could be carry. Now, Thursday, initial jobless claims, continuing jobless claims. This is going to be an interesting week. And I just want to point out that if we do get really good inflation numbers today that are really low, like, hey, it's getting better. Well, let me show you something. So I'll go to February 3rd, okay? And this is Friday, February 3rd, and we had non-farm payrolls. They bounced, right? So that was the expectations. It was 500,000. Wow, yay. It's so amazing. So here we go. That might be what we see today in the inflation numbers, correct? But, as customers of the United States Mint, we know for a fact that the United States Mint kind of is, well, they're ahead of the curve when it comes to inflation. And I can show you this right now. I'm kind of excited, actually. So here's an article by Mike Unser dated February 8th. That was, 6 days ago, 2023. And the title of the article is U.S. Mint Prices Increase for 2023 Coin Products. Folks, last time we saw this, coin increase, price in silver, all that good stuff. Not too long afterwards, we saw some incredible price hikes in the consumer market. So I do believe the United States Mint government agency is ahead of the curve, and they know what's what when they increase their prices. And I really do believe that we're going to be seeing more price increases in the future. So here we go. This is the schedule, and I'm going to go ahead and leave a link in the description for this particular chart. And it shows you the increases. So $7, $7. I mean, we're almost looking 10% here on some of these folks. Easily more than 10% there. Here as well, almost. So yeah, lots of cash. Over 10% there. Incredible. So how about if everything you purchase is 10% more expensive? Not liking that too much. I mean, look at that. Mighty Mintage ornament up $7 from 27. I mean, that's incredible, isn't it? Yeah, and they're not done. So look at that. $6 above for the PD and the S sets. Remember that? Yeah. It's about 12%, isn't it? Incredible, folks. So there you go. I think that's a heads up for us. And thank you to the United States Mint for giving us that heads up and not really faking us out with this stuff here, these data that they're compiling. Because really, how often do they issue these numbers and then go back and, well, we looked at the numbers and we needed to revise it. Yeah, there's not going to be any revision here on these prices. I think if we do see revision on these prices, it'll probably be in a couple of years. And that's what I mean going lower. And I do think that these actually could go higher this year once again. Yeah, once again, we could see another price increase. Could you believe it? Wouldn't that be amazing? I mean, we haven't even got out of January, February, and then we got these incredible price hikes from the United States Mint. So what's that mean? And for July, August, September, October, could we see another price hike then? Absolutely, I would think. Now, let's head over here to the Google machine. I did want to show you this. There's a new inflation warning for consumers coming from the supply chain. I think that's something we should definitely be looking into. Oh, and by the way, happy Valentine's Day. Stock futures inch higher as investors prepare for latest inflation data live updates. And that's probably why the JM Bullion is flat today, right? So that's probably why things are flat over in the precious metals market. This is the economic buzzword. CPI report today, live updates, what to watch on inflation. Big deal today, folks. Hope you're paying attention. And this is probably the last stop I'm going to go to. And I've mentioned this before. So this company, Twilio, I think is what it's called. It's going to cut 17%. I'm kind of geeked up about this because it's kind of exciting, actually, for investors, but not the people that work there. So Twilio is going to cut 17% of its workforce. So basically what that does, folks, is, it's a high-tech job, right? And these high-tech jobs pay a lot of money. And what Twilio's doing is they're staying alive by almost 20% of its workforce. It is incredible. It is incredible. It is sad But at the same time, we've seen, I think Meta's going to be doing a new round of layoffs. Microsoft has done some, and all these tech companies are starting now because they pay the most money to their employees. And, well, what's after that? Well, I would think the mid-tier companies after the tech companies. Now, check this article out. This is a big deal. This is grid.news, okay? And this is written by Matthew Zeitlin. And the name of this is Corporations Embrace Layoffs and Stock Buybacks in the Name of Efficiency. Here you go. And it is actually a practice that companies do, lay off their most expensive employees first and replace them with younger college ones who will work for peanuts compared to the other employee that just left, right? I think that's probably what's going on. Now, this is dated February 13, 2023, and there's a lot to this. It says here corporations want investors and analysts to know that they, too, realize good times fueled by low interest rates and soaring stock prices have ended. Yep, there it is, writing's on the wall, and they see it. Earnings calls so far this year show that many of America's largest and most prominent corporations are trying to demonstrate that they're serious about reducing costs, dealing with profit growth, and returning money to shareholders. In fact, I think Disney suspended their dividends in 2020 and just recently announced that they will be adding the dividend again. So some companies, especially in the technology sector, here we go, I'm telling you, are turning to layoffs, often in the tens of thousands of workers, to rein in costs and hope to see a loose labor market and lower wage growth as a result. Yeah, don't think that's going to happen. The actual top line results, sales, showed a slowing of the ability of companies to pass along higher costs with some extra profit included, right? Pass along higher costs. That means to you and me, the consumer. S&P Dow Jones Indices, senior index analyst Howard Silverblatt wrote in the analysis, in other words, profits have been eroded by businesses no longer being able to raise prices with impunity. So they will be punished by the consumer if they raise prices. That's right. So looking at how chief executives talks about their earnings in January, Silverblatt noted that along with the relatively decent numbers were numerous warnings from CEO of harder times, squeeze margins, and consumer pullbacks. Remember what the Bank of America CEO said? Yeah. The United States could have a debt default, and that is not good for the dollar, but it might be good for precious metals. So it's like life, bittersweet. It's like apples and honey. Morgan Stanley analyst Michael Wilson calls this margin trouble, which means businesses still pay out the high wages they needed to attract workers back in 2021 and 2022, while their own ability to set prices fades away. We've already seen margin trouble for a number of companies that have reported fourth-quarter earnings, and we only expect the issue to heat up as we move further into the year, Wilson wrote in a note for clients. Absolutely, I think he's onto something there. But he says corporations are still trying to satisfy nervous investors, whether it's through layoffs or paying out more money to them. As the economy gets choppy, companies will have to work harder, and workers, employees, might end up paying the price. Here we go. So that's the layoffs right there. We talked about that. Meta's going to be doing probably some more layoffs. But this, I think, is the piece de la resistance or something or other. Potential slowdown in price hikes. I don't think that's going to happen. I mean, if we are in a deflationary environment, that's great. That'd be awesome. But check this out. I think there's one more thing here. Here we go. I think this is the crux of it all. And I think this is what's keeping the market kind of propped up, in my opinion. Keeping shareholders happy with stock buybacks. So if companies are flush with cash, right, millions and millions and millions of dollars, and there's millions and millions of shares out there, well, what a company can do is, they issue bonds, they can issue stock. But right now, I don't think you want to issue stock because it would dilute, I believe, the shares that are out there, making them less valuable. Okay, so what companies will do, they'll do stock buybacks, and what that does is makes less of that stock available in the open market, thereby creating a little bit of a draw for it, interest for it, raising the price somewhat, especially because, when a company does a stock buyback, do you think they're buying 10, 20, 100, 500 shares? Maybe, but I doubt it. Maybe they're buying 1,000, 2,000, 10,000 shares at a time, right? So that may actually move the market pretty easily, okay, with that kind of large money. Because large money's, well, that's amazing. What a force. What an unstoppable force. So once the money is used to purchase the stock buyback, the stock stays up at a certain level, and the company can keep doing that at intervals when they see the stock coming down. All right, so they can bring it back up with the stock buyback. Well, when that company's out of money, flush out of money, or wants to use that money, that cash on hand for something different, well, guess what? that stock will not be in a buyback mode. In fact, that stock is going to deflate. And honestly, I would think because it's been propped up with stock buybacks, it's probably going to drop a lot further than probably would happen if it wasn't under that buyback theory. So there it is. We are in some really interesting time, folks. And I'm going to go ahead and leave a link in the description for these items that we visited here today. This grid.news, really cool stuff here, as well as the coinnews.net article from Mike Unser, as well as the Market Watch economic report. So there it is, folks. Hope y'all enjoy this. That's the economic side of things, economic opinion from Stacker. There it is. Thanks for watching. Thanks for dropping by. Don't forget to hit the like button. And hey, if you do like what you hear and see, please subscribe to the channel. It's free. Son of a Silver Stacker, out.